Welcome. In this video, I'm going to be showing you guys with backtesting data just how incredibly well market structure works in your favor. So I've gone ahead and backtested all of this price data, which ended up being 163 market structure setups. And so I'm going to show you just how often it works in your favor and how often it fails. I already did the back testing, so I'm going to explain exactly what I'm testing in this video just to start it out so you know what this back testing data is based on. And then I'll fast forward through all of the testing of this data and show you the results at the end. Before getting into this, quick shout out to my affiliate exchanges. First up is Bit2Next Exchange. These guys are allowing all customers from around the globe. So no VPN, no KYC. If you're in America or another country where you're kind of geo-blocked from most exchanges, check out Bit2Next with my link in the description down below. Also have BingX Exchange. These guys are cool because you can use this one to trade Forex, crypto, indices, and commodities all in one exchange. And then there's good all Bybit. If you guys can use this one, you do require KYC on this exchange. So just be aware of that. But Bit2Next Exchange, if you can't do KYC because of your location, Bit2Next is allowing all customers globally. So check them out. Now let's talk about exactly what I'm going to be testing when I'm testing market structure, so you guys have an idea of how market structure works and exactly what I'm going to be basing these results on. Okay, so before I actually show you the back testing, fast forwarded and getting into the results, you kind of have to know what I'm actually testing so you have a good idea of what's going on. So let's just start where I started with the back test. And so structure, market structure, I did make a video on this yesterday. I uploaded it. It's 50 minutes long going over all about market structure. This one, I'm going to keep it short on the explanation part, but I'll get into a just quick run through of what I'm testing here. And then if you want to get into more detail about how to mark your market structure correctly, watch my video uploaded yesterday, a 50-minute long video all about market structure mastery. So let's take a look exactly at what I'm going to be testing just by running through some of these and showing what I would classify them as either a win or a loss. So let's get through these. Now, first thing we have is structure break. So here is a pullback that has a multi swing high, swing low setup. So these green arrows are marking short-term swing lows and swing highs. So you see these green arrows. And so to classify a pullback as a valid structure, we do need to have a swing low to swing high to swing low to swing high. So it's going to be a kind of bouncing around of swing lows to swing highs, short-term ones, in the same pullback without breaking down or up. So a valid pullback in the context of an uptrend would be like this, where we go short-term swing high, then we put in swing low, swing high, swing low. So we have at least three where we go up, down, up, and then we do whatever after that, but at least the three where we go consecutive 1, 2, 3, 1, 2, 3, up and down, up and down. So that's kind of what builds up a structure that's valid to be broken. And so let's get into the actual break and what I'm going to be doing this test based on. So first of all, we have to have a close of the 4-hour candle to actually break structure. So here we have this structure that began right here, and then it broke down on close with this candle right here. So the high of this particular pullback is where we would shift structure if broken to the upside. We shift bullishly on this candle right here. So this one here breaks this high right here to the upside on close. So from this point onwards, we need to have our low before that break, so lowest point of price before we broke to the upside. And then the assumption, once we have bullish structure, this is now bullish structure that we broke that downtrending structure. We're now in bullish uptrend structure. And so we look for our pullback to begin. So we get a swing high right here, but then we're just followed by another swing high. Now here's where we start getting into the more of a complex pullback. So we get our swing high right here. we get another lower high, swing high, we get the swing low. So we get those consecutive swing high and swing lows all in one pullback here. So at that point, we are just expecting that this pullback here is going to be a higher low on close compared to this low right here, now that we have the bullish structure, because we broke above this previous bear structure. And so what would classify this as a winning setup once we break the structure here? That was a loss, by the way. So when we broke that, that was a loss in terms of the bearish downtrend ending. So that counts as a loss. And so let's get rid of these drawings, clean this up a little bit. So how do we classify this as a success? Well, we need to see that where this pullback began here, this high, right, is broken out to the upside on close, which happens on this candle. And in between there, we cannot break down this low that happened, the lowest point before that bear structure break. So we get a successful follow through right here with this candle on close. All right. And so now once we have that, that's one successful trade setup. That's one successful bullish structure follow through once we get that close. And so now what we do is we update our current low. Okay, so this is our new bullish structure low that has to hold for us to be right. And so we're just expecting and assuming that the trend will continue at this point and it will hold a higher low on close compared to this low right here. Okay, so once we get that bullish structure break, we're getting into new bullish structure. This is our new low compared to this previous one. So if we break down that low right there, then we're now shifting into bear territory again, and that's a loss if that were to break down on close there. So we keep going. We have that win there. Now what we're expecting is this pullback, as we get into this next pullback, that we're going to hold a higher low compared to this one here. And so we come up, and now we see again our pullback where we go swing high, short-term swing high, short-term swing low, short-term swing high, short-term swing low. So we're bouncing around here with these short-term swing highs and lows all in one pullback. And so we're just assuming that this pullback here is going to follow through to the upside because we're in current bullish structure. And you'll see why we assume this when you see the results of how well this works and how often it works. But anyway, let's just continue with the examples here to kind of help you understand what I'm testing. So here's our high right here before our little complex pullback with the consecutive swing high, swing lows all in one pullback. So that's our new high there. So we need to see that broken before we actually change where our low of market structure is. And what that happens is on this candle right here. So this candle breaks that high on close. And that is when we update our new market structure low, which is right here. So it's the lowest point before that break. So we have the high of that pullback right here. The lowest point between that high that was broken and the breakout candle over here. Okay, so right here, that's our new low of market structure that needs to hold, and that becomes a success again. So that's another success. We have another follow through, close on close, follow through here to the upside. All right, so now what do? Well, we're going to be expecting that we follow through again. So let's kind of clean this up. So our new structure low that needs to hold is right there. Okay, and we are expecting that this holds on close. We continue to be a buyer on pullbacks, just like we were since over here on this pullback. We bought this pullback, it followed through. We bought this pullback, it followed through. Great. Now we're going to be buying this pullback and looking for it to follow through. And what happens? So we get the pullback, right? Or get into our complex pullback, and we never close below that low there. So that's our important structure. As I outlined, we never close below that level. And what happens is here's the high before that new structure is starting to form. We break it on close on this candle right here without closing below our important structure level that holds bullish structure. So bullish structure continues. That's another winning setup right there. This whole thing, buying down as low as possible on this pullback, expecting that this bullish trend is going to continue. So that's another win. All right. And we break to the upside. So we have to actually update our low now. And this time it actually gets lower. So it's the lowest point through this pullback before we break to the upside, creating this new structure. Okay, so we break it here on close right here. Success, that's a successful setup. And we continue. So we start getting into another pullback. Remember the consecutive swing high, swing low, swing high, swing high, swing low, swing low. So we get into that complex pullback. So what we need to do is break this one right here, and we're just expecting that during this consolidation that this is going to follow through. We're going to hold the low down here. This is going to follow through for a new high on close, which it does so. So we do then consolidate and follow through, create some new structure, right? So let's update. So once that happens, we get a close above that. Can get rid of this one here because we already broke that high, right? So this is the high that we're looking to break where this pullback begins. We break it on close on this candle right here. This candle breaks it and closes above that level. And so now our new low is updated and this becomes a success. So let's get rid of these drawings, clean things up. So this is our new low, the lowest point before the break on this level, and we're still in bullish structure. So we just keep staying bullish until the structure changes, okay? And so this is another success. We break it right here, and we get into another little consecutive pullback there, okay? And so let's mark in over here. We broke it on this candle, and then we get into the pullback starting here, where we go consecutive. Short-term swing high, short-term swing low, short-term swing high, short-term swing low, short-term swing low, and then we break that one. So once we break that one on close, we have to update our low of structure, and that's another success right there. We continue higher, and we held the new low here for our bullish structure to hold and continue. So we get rid of that one. Our new low that needs to hold is right here, and then we break this high before that pullback, but with the multiple swing highs and swing lows in it. And so now we start going up, okay? And we're expecting just continuation to the upside, continuation to the upside. There's no reason to switch bias because we are maintaining bullish structure, okay? So we get into our next complex correction here where we get consecutive short-term swing high, short-term swing low, short-term swing high, short-term swing low, blah, 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 on and on, all in one consolidation, pullback. And we're just expecting that this low here is going to hold and we want to be a buyer. So this is the high, the new high before the pullback that we need to see break before we form new structure on the low. And so we're just expecting this pullback is going to follow through. And what do we get? We get another follow through. Here is the break to the upside there on this candle. On close, break that level before the pullback. So we have a new swing low. It's the lowest point between where that structure was broken to the upside there and right here at this low. We break it right here. So this is our new low that has to hold on close, okay, to maintain bull structure. And we stay bullish until this changes, okay? So we keep on going. We broke it. That's another successful follow through with our bullish structure. And we always just assume it's going to keep on going, okay? So now we have this. We broke to the upside right here. And at this point, we're just going to be expecting that our next pullback is not going to break down below this low right here on close. And what happens? We retest it, wick through it, swing failure, liquidity grab, and eventually we go up and break the high before this pullback. Okay, so we're gonna have to do some updating, and that's another success. Okay, so now we have the lowest point between the high that started this pullback here and when we broke to the upside on close right here. And then, right, so we broke it, new low, lowest point. And then we can update once we get this pullback underway with the consecutive pullbacks, swing high, swing low, swing high, swing low, right? And we're just assuming this pullback here is going to hold a higher low on close compared to this one here, and then go higher for a new high, which it does over here, right? So once that happens, we update it again. It's a success. That's another win. So as far as my back test goes, it's another win, just so you guys know what I'm testing. We break it right on this candle here, strong big candle, right, closes over that level. So we're going to be updating this, but now we have a new low as well. This is the low that has to hold. And so we look for now a new structure, a new pullback with consecutive swing high, swing low, swing high, swing low, which happens right here. Okay, so let's put our high in where that begins. Consecutive, short-term swing high, short-term swing low, short-term swing high, short-term swing low, short, yeah, so on and so forth. And so we're waiting now, this pullback, expecting it's going to continue, which it does, and it breaks right here. So once it breaks to the upside, we update our low. So what's the lowest point before we break to the upside out of this pullback? Right there on that candle. That's the new low that has to hold on close. And we're just assuming now, once that's broken over, that this pullback here is going to be continuing higher and not going to close below this level. Okay? And so we get the pullback, we wick it, another liquidity grab below that level, and then we continue higher and we break the highs. Okay? So what are we going to do? That's another success. We're going to update our low so it becomes that lowest point before the pullback began that we just broke out of. Okay? There's the breakout that happened, right? So now we're just expecting that we're going to hold this level on close, and we're not going to get bearish until that level breaks down on close, which we're about to get into. So this time we start the pullback, right? Start the pullback here, get into that complex pullback after breaking the structure to the upside, and then we eventually do come all the way back down and close below it. So what do we do now? We just took a loss. This time that's a loss. We broke the structure to the downside on close on this candle. Okay, so just so you know how I'm backtesting it, close is below, breaks the structure. Now that's a loss. Okay, so what are we going to be doing now? Well, we're going to look to the highest point before that breakdown occurred, which is right up here. And then we're going to be looking for now a bearish continuation. So let's look. Do we get a consecutive pullback here, which we do right here? And so we're just going to be expecting that on this pullback here, since we get our short-term swing low, short-term swing high, short-term swing low, short-term swing high, on this pullback right here, let's get rid of this. We're assuming that this pullback right here is going to be going lower now that we're in bearish structure territory, okay? Doesn't mean that you're going to short it because it doesn't pull back very much for this big of a range, but we have new structure formed here if this breaks down on close, which it doesn't end up doing so, right? So that's one where essentially we don't actually get anything. So it does go down and it does take out the low, but we don't close below it. So we don't have an updated higher or lower high. We don't have an updated structure here because we never closed below where that pullback began. Okay. So we're just waiting at this point, and we're just assuming that price is going to keep going down and eventually break down on close below this level until we actually have that structure shift. Okay. Right. Got it. So this one then ends up being a fail. So this does shift to the upside. And so that would be a loss right there. We never actually get our full follow through to the downside here. So we are going to have to do some updating. And so our lowest point currently there, we break the structure on close right here. And now we're going to be assuming bullish continuation from here on out. And so we look at the current structure once we've broken the high right here, and we're going to do some updating soon on our structure. But first we need to get a bit of a more of the complex correction with the swing high, swing low, swing high consecutively. So we get our swing high, swing low, swing high. So we have a correction here that's valid for updating our structure. Okay, so we're assuming continuation to the upside. Let's put in our new structure here once it breaks out to the upside, right? So here's the high that begins the complex correction, up and down, short-term swing high, short-term swing low, short-term swing high, short-term swing low, and then we break it on close right here. So now we broke it on close here, we have a new low structure that we can mark in. So it was the lowest point. Well, it was on that candle that also was the highest point of this structure. So now we're going to be holding right there. That is where we need to see hold. We're assuming that after this closes above that high, we will be holding that level on close. And what do we get? We get the pullback there and then a follow through move. So we get our complex pullback, holds it, doesn't touch it, doesn't close below it, doesn't even wick it. We follow through. That's a success. Okay, so we are assuming that's going to continue. Now let's update things. We have our new high right here that was just broken when this pullback began, and we also have a new low. So the new low of this pullback right here Now we're assuming that low is going to hold on this pullback. And what do we get? It holds and then goes higher. So we have a new high here, new low of structure here, right? So now we're assuming once that breaks on this candle on close, that it's going to hold again. It's going to hold the low right here. And if it doesn't, then we're wrong and that's a loss. But what happens? It goes down, goes higher, and it's successful. So it closes above our new high right on this candle here. So here's our new high for this current structure. And what's the lowest point between there and where we get the breakout? It's right here. Okay. Success on that one. And then we follow through that success on that one. And so now this is our current level of structure that has to hold. Hopefully it's making sense. This is plenty of examples. I think I'm going to kind of stop soon. Just, you should have an idea of what I'm testing by now. So just one more here. So we break out there, right? Get into a complex correction. We're assuming this pullback is going to hold a higher low compared to this one. This low right here. And guess what? So we update the high of that when the pullback begins. We break it to the upside right here, success. We get our follow through. We have a new low of structure that has to hold. And we're assuming, again, pullback's going to go higher, higher, higher. So we just keep assuming that the structure is going to maintain itself, keep going in the direction that it's currently going until it breaks. Then we flip the bias, I should say. So that's it. That's enough examples. It's got to make sense by now. Thank you, guys. Time for fast forwarding through the 163 back tests where I test all this data and show you how many times it follows through without breaking down in structure, how many times it fails. All right, here are the results. So you can see just how well this works in giving you a accurate bias that works most of the time. So this was tested on Bitcoin 4-hour time frame, and I'm just testing market structure, follow through, or failure. The number of back-tested structures for this was 163. I just tested all of the Bybit price data on TradingView. And then out of those 163, how many followed through? 115 of those were followed through, 48 were breaks in structure, which are considered losses. And then that gives it a 70.55% win rate. So this gives you a significant edge for follow through in one direction or another. And then I just kind of put this out for fun. An example gain on the account figure. If you were using a 1-to-2 risk to reward ratio and risking 2% of your account equity per trade, that would equate to a 364% gain on the account over this series of specific trades. So obviously this isn't an exact strategy for entry and exit and risk to reward ratio. I'm just testing, assuming if the structure is going to continue or break down. And so if you could get a 1-to-2 risk to reward ratio with a strategy to actually enter on the pullbacks and assume trend continuation, then you could get something similar to this. Let's say even if it was a 1-to-1 risk to reward ratio, assuming continuation with market structure, then you still have an extremely profitable strategy. So pretty ridiculous results, just showing you how well market structure works. This is why I made the video yesterday that's 50 minutes long, going through all of the market structure and showing you guys just how well it works. So here's the actual numbers for all this Bybit price data on the 4-hour time frame. And you can go through and test it on a 1 hour, 15-minute, daily, weekly, or do a multi-time frame analysis. Throw in a 200 EMA for extra bias, things along those lines, and then get an entry method using this as your trending bias, using some sort of method like lower time frame divergence, hidden divergence, things along those lines, reset on stochastic RSI, things that can get you in on the pullback, or even just a Fibonacci retracement to enter on a pullback with assumption that trend will be continuing in the current structure's favor. So that's kind of the idea with this. And you can just see how well it works. Of course, this is just a fun test. It's only 163, so I'm sure that this number will change and probably go down a little bit based on a higher sample, but you can just see that this does in fact work, gives you an edge. So even with a 1-to-1 risk to reward ratio over a series of many trades, it can put the odds in your favor. So it's something to look into for sure. It's promising. And something that you should be paying attention to is market structure. If you don't already have it down, definitely get this mastered and add it into your system for additional bias. So if you're interested, do have a Trade Pro market structure indicator and some other Trade Pro exclusive indicators, but those are on my Patreon. So you can check out my Patreon, my link in the description if you want to use this indicator. You don't need this indicator for knowing the structure though. It just helps with identifying it, and it helps me keep the back testing all rigid, so it's not open to interpretation. So that's kind of the deal with this. It also will mark intermediate and longer term swing highs and swing lows as well, but I just have it right now with the settings marking in just the short term swing highs and lows for this specific test. So that is the indicator. If you want, you can check it out on my Patreon. Also, if you like this type of testing, you learn something, and you appreciate this, like the video, subscribe to the channel. I'm always pumping out educational, valuable content, and check out my affiliate exchanges. If you need an exchange to trade crypto on, then Bitnex is the one, or Bybit if you can use KYC on this one, but Bitnex allowing customers from all over the globe, no KYC or VPN needed. And then BingX is great because they allow you to trade Forex, commodities, indices, and cryptocurrencies. So check these guys out, my affiliates, if you want to support the channel, or just like the video. That helps me. Leave a comment just for the algorithm, and that helps the YouTube algorithm put these educational videos forwards, because otherwise the YouTube algorithm does not push my videos. And this type of video is extremely valuable with all the information out there that is not exactly helpful for people trying to learn how to trade properly. So guys, make sure you hit the like button, comment for the algorithm, and subscribe if you already haven't. Thanks for watching though, and have a great day.